Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, May 23rd, 2023. It's now the 22nd. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup for count. And to negate that for end of day on the 23rd, there must be a close below 4158.77 for a price flip to the buy setup count 1. The propulsion momentum level for 50% has been qualified. So the confirmation bar will happen tomorrow with an open higher than this close and tick higher than this high and close higher than this close. All that happens and this level becomes qualified and confirmed, and this 50% qualified exhaustion up will be confirmed also. And failing to get the confirmation bar for the 23rd means that Biden and McCarthy did not come to any conclusion about the debt ceiling limit, and failing to get that to happen, I'll be looking for more downside. There should be a pause at the mid band of the Stark bands, 4161.14. That's a 9 simple moving average. Conversion line is right underneath it. That's a 9 EMA. And then down to the conversion line, 4131. And then there's the ongoing demand line, which for the 23rd is at 4112.50. And a close below that level will qualify this demand line. Then there's the disqualified down 1 for trend factor. That should prove to be some support. Then we've got the lower Stark band, 4092. And then the channel 3 low. Get a debt limit deal done between Biden and McCarthy, or at least some verbal agreement that there's progress being made. And this should get confirmed, this qualified 50% momentum up. And if this gets tagged when it's qualified and confirmed and pass through that, there's the qualified supply projection, and then just keep blasting through that, and then our target will be reached pretty quick. The relative retracement is qualified up to at 4311.69. And here's a zoomed out view going back to the beginning of the year. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. The S&P 500 weekly chart starts the week with the combo and sequential sell setup 2 count. And to negate that for end of day Friday this week, there must be a close below 4169.48 for the price flip to the buy setup count 1. And the weekly chart blew its chance to get the disqualified momentum up for both 50% and 100% on its way to get confirmed as it was qualified. However, the open for this week was below the close for last week, so that ends that right there and then. So if this has the price flip to the buy setup count 1 for end of day Friday, and the daily chart does not become confirmed for 50% momentum up, then there's a demand line right at 4150.89, and we just use that for a support line and then get past that, there's the conversion line, the channel 3 low, the baseline, and the mid-band of the Bollinger Band. The NASDAQ 100 high-low and the NASDAQ Composite high-low is where it's all happening. You can see on 517 here in the NASDAQ 100 high-low that there was a cross under of the 5 underneath the red 10 EMA, and that happened at 2.66 above 0, so that fits my criteria for shorting. And I did today with the Qs, again very slightly, and it looks like the blue 5 EMA has gone under the gold 21 EMA here. Let's see if the red can get under it next. And the long-term KST pulled back on the stick a little bit today. Looks like it ended the day going sideways. And the intermediate term KST did fall below 0. It's trying to maybe pull the stick back up and get above 0 and its signal line. And the short-term KST did cross under its signal line and is below 0. So for sure, some short-term downside action for the big fat cap balance sheet extraordinaire tech index QQQ. And the NASDAQ Composite itself did have the blue 5 EMA cross above the red on May 10th, and that happened right at negative 4.95, so within my criteria, plus or minus 5 from 0, it's close enough. And this for sure shows the speculative mode that everybody's in, going after the left behinds after the big fat cap balance sheet extraordinaire mega techs have had their day in the sun, and now they're going to give everybody else a chance. And that's a sign that traders and investors are thinking that there's more upside in the markets in the speculative areas. So we have the 5 EMA in blue above the red 10 EMA, and both of them are above the gold 21 EMA, so that's looking pretty good for upside of the composite itself. And the long-term KST is somewhat planing out, maybe an upwards indication under 0. It needs to get above its signal line, which is right above 0 at positive 1.20. This red line here, the intermediate term KST, has pulled back on the stick above 0, went above the signal line in red. It's at 70.69. That's a good show. And the short-term KST just blasted above its signal line and 0 and is headed straight up and to the right. And here's a classic example of what's been going on in the NASDAQ Composite for the past week or so. Here's Clover Health Investments, and it actually has okay fundamentals, some free cash flow that's about 2% of its market cap, and a little bit of debt, not too bad. I just couldn't find any reason why it was driven into the ground by the shorters. So they're starting to cover this, and maybe people jumping on board. I would not on a penny stock. This is purely an example of what's been going on. You can see the REI has sought and found neutral 0. The DM1 is flying above its overbought line. Same thing with ROC, and the DMI plus is well above its minus over here. with the ADX on a nice upwards slope, indicating a strong trend up here. And the 4 simple moving average in blue is above the red 9 simple moving average, and they're both above the gold 18 simple moving average and starting to get that nice rainbow pattern. A little bit of a pause these past few days, but that's indicative of what's been going on in the NASDAQ composite. People are reaching deep into it, trying to pick some equities up off the bottom. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point and the uptrend line from 06/16/2022. Price in the aftermarket hours for the S&P 500 at 5:31 p.m. on the 22nd is 41.96. So to the downside is S2, S1, the daily conversion line, this weekly ongoing demand line, and the top of the range at 4163.72. So to the upside is R1, the weekly 2018 broadening top and dashed red at 42.22, and this top of the gap zone 1 at 42.19 is a level I'll be watching there. The S&P 500 daily chart did make it above its 21 EMA signal line, and the NASDAQ 100 AD line is still above its 21 EMA signal line, and the ROC 1 is right at 0 at positive 0.02 and pointed up. ATR2 is right in the middle of its low volatility green zone at 34.40. And the PPO extreme did bump down very slightly. It's at 3.85% above 0. The New York traditional McClellan breadth oscillator to get back to 0 would require 354 decliners over advancers to get back to 0, so the MCO is above 0. Have a great day.